over the weekend we've seen Bitcoin continue in this tight range. Technicals really here couldn't be less decisive despite the macro environment frankly being crazy. We've got banks failing and the impending doom of the US debt default. But Bitcoin, for some reason, is just showing us this tighter and tighter range as we consolidate. On the 4-hour chart, I think it's really illustrative to show that the entire range over the weekend, really since last Thursday, has only been about 3.4%. We've also had this very flat and capped volume. And I feel like we say this a lot, but it's an accepted pattern across all markets that generally a large move follows a period of tight consolidation. In fact, adding to the kind of indecisive nature of the chart at the moment on the lower time frames, we can show we've got very kind of clear symmetrical triangle, a neutral chart pattern which doesn't really give us any directional bias when it comes to a potential breakout. So although we know we're going to get a breakout, we haven't got any indications here as to which way it's going to go. If we move on to the higher time frames, so this is the weekly chart, and we did some analysis on this on our growth curve at the early part of last week. Effectively what we've got is the long-term trend line being broken, giving us this expanding wedge, broadening wedge, which is a continuation pattern. So whilst we're in a confirmed uptrend, it means we're going to expect to continue the uptrend. The important thing I think to note here is how we've got a convergence. These are the weekly moving averages. So we've got the 200 week, green is the 20 and the white is the 50. We can see that all our moving averages have converged and are currently providing support for price. And I think it's really key if we're going to continue our bullish uptick and test the top end of this trend line that we stay above these moving averages. If we were to break down on them, then we're probably going to test the lower trend line, probably just below 25,000. Ultimately, the long-term chart is bullish. The direction of the near-term breakout, however, is going to be determined by the ability of these moving averages to continue to provide us with that support. Given the macro environment, we really should be expecting to break up, so we should expect that support to hold. However, we are seeing whales effectively capping the market by taking profit after what has been a very lean 18 months for them. Something that caught my eye on Crypto Quant was a very good piece of analysis by IT Tech, and effectively he's sort of demonstrated this by monitoring wallets associated with key Bitcoin miners. What we can see is that the miners' reserves are declining massively. The miner reserves are declining. What that means is they're sending that BTC to exchanges and they're selling it. They're capping their profit to cover their operating costs, which obviously have gone up in a time when the price of Bitcoin has fallen. So we can see that we had a very steep sell-off at the back end of last week, and that is probably going to give us a directional bias to trend down as that BTC hits the market during the early part of this week. That's everything we've got for today. If you've got any questions or comments, just drop them in the comments below. If you want further analysis like this, then you can sign up to our signals package where you'll get all our daily analysis plus up to 10 to 15 tradable signals a day. We also give access to the indicators that we use to generate this analysis, and you can do that by signing up to the indicator package.